10 money traps to avoid. Save your finances. The best way to capture an animal in nature is to set a trap. Financial traps are no different. Traps are always lurking, waiting for the next victim to fall into them. Today, I'll show you some financial traps that you absolutely must avoid. But first, give this video a thumbs up and consider subscribing if you're new to our channel. If you appreciate the video, we invite you to subscribe to our channel and support us with a donation. Thanks to your help, we will be able to continue producing high-quality content and constantly improving our channel. You can do it here below, through the appropriate buttons, subscribe, and thanks. 1. The no money down plan. You want a big TV, a luxury mattress, or a comfortable sofa, but you don't have the money. But it seems there are ways to get what you want without money. The zero down trap is a pink trap designed to lure you into a long-term payment plan when you could simply pay a lump sum. A 0% down payment may seem legitimate and convenient, but it forgets that one day you will have to pay for that product, and the payment period is usually between 12 and 36 months. The problem arises when the payment for the goods is not made by the due date. At that point, interest is charged from the date of purchase. In most cases, you end up paying more for a product that you could have bought at a lower price if you had saved the money to buy it. How to avoid these financial traps? The only way is to buy something when your wallet says it's ready. But if you can't wait, compare prices first. Buy at the right price. Secondly, start saving as soon as you buy the product. Don't wait for the due date. When you park your old Honda in the parking lot and are about to go to the office, a colleague arrives with a new Audi R8 and parks it right next to you. Tinted windows, silver body, high-quality speakers, leather seats. It's everything you've always wanted in a car. You can't help but love this Audi R8. And you'd even be willing to trade your Honda for a car like that. Imagine the surprised expression on your friends' faces when they see you driving a car like that. It would be a very satisfying reaction, wouldn't it? Too bad you can't buy one, but you could rent it. I know what you're thinking. Please, don't do it. It's in human nature to be tempted by luxury items, but if you can't afford them, don't rent them. Renting a car or a luxury item can be one of the most expensive expenses you'll ever make. And even if renting is cheaper than buying, renting is still bad news for the household budget. It means falling into the lifestyle trap, spending more than you can afford to look good. If you already have a nice and comfortable Honda, why throw it away and rent a new Audi R8 that you'll probably lose interest in long before you finish paying for it? The only way to avoid these traps is to spend on what you need, not on what you want. Never spend more than you've budgeted. It's better to drive a small car, save $5,000, and spend it on other things, like a vacation. 3. Student loans. I want to go to college, but I don't have enough money. What to do? Get a student loan from the government. Student loans are great and give many students who otherwise wouldn't have had the opportunity to go to college the chance to study. However, student loans have become the biggest financial trap in most countries. The student loan crisis amounts to about $1.6 trillion worldwide. There are few ways to go to college without taking out a loan. Besides paying out of pocket, you can apply for scholarships and grants. However, if these are unsuccessful, you can choose a cheaper college or attend a community college before transferring to a university. This way, you can save thousands of dollars on education costs while keeping the money you have. You graduate without debt and ready to conquer the world. 4. Adjustable rate mortgages, ARMs. Mortgages are usually of two types. Fixed rate, where the interest rate to be paid is fixed for several years, and adjustable rate, also known as ARM, where the rate to be paid changes from time to time. I advise never to opt for an adjustable rate mortgage whether it's a 4-year or 6-year ARM because once the interest rate adjusts, you have no control over what happens next. Taking out an adjustable rate mortgage is simply playing with fire. How to avoid this financial trap? If you must, take out a fixed rate mortgage. At least the maximum amount to be paid is fixed, and you won't have any nasty surprises in the future with rising mortgage rates. Another option is to start with what you can comfortably afford, rather than what you can borrow, when looking to buy a home. 5. Risk-free trials. Even the name of this trap sounds dangerous. It's the scariest trap of all, convincing people that there are no risks. One way companies charge you more than they intend is by telling you to sign up for a free trial. Once you enter your debit card details, the trial is activated. The trick of this trap is that they expect you to forget to cancel it, which usually happens in 90% of cases. It happens to everyone, and in most cases, the monthly fee after the trial is much higher and is simply charged to your account. The problem is when the trial was $1 or free, but you receive a bill for $167. If you're wise, don't do a risk-free trial. This is my advice. 6. Surprise winnings. Have you ever received an email telling you that you won a contest you don't remember entering? Well, it was a trick, and you'd be surprised how many people fall for this trap. Most of these emails ask you to pay a fee to receive the prize. This is absolutely a scam. Contest and lottery winners never pay a fee to receive the prize. Some of these traps include a pop-up ad saying you won an Amazon gift card. We know you want the Amazon gift card, but sorry, it's a trap to steal your money. Beware. If you click on the pop-up, you'll most likely end up in a trap you won't know how to get out of. It all starts with the message. 7. Payday loans. There are worse things than Netflix credit card debt. Payday loans. Short-term loans are just trouble. You end up paying ridiculous interest on that loan and regret thinking about it from the start. Life is complicated, and sometimes unexpected events occur that even an emergency fund can't cover. In these cases, never resort to payday loans. These people are the worst of the worst in the financial industry. Imagine how bad it must be to be called the worst of the worst. With a credit card, you can get cash back, points, or other rewards, but the only thing a payday loan can do is take all your money with a very high interest rate right after payment. I'd say find a new job or sell what you don't need, but don't even think about going to a payday lender. These are legitimate loan sharks, and it will take years to collect. 8. Investment scams. Sooner or later in life, you'll receive too many lucrative solicitations. First of all, they're probably just like the proverbial grandmother. Most people want to earn more with zero risk, but they forget that it doesn't work that way. You spend money to get more money. So, if someone gives you investment advice, be careful. Any offer promising returns of 10% or more in the coming years is probably a scam. Be especially wary of those offered to a select few and make you believe you've missed out on a great opportunity. Don't fall for these investment scams. Always be vigilant and ask yourself why there's an offer for you and not for your friend Peter or Jane. Before accepting an offer, sit down and analyze it carefully. You can also research the company by ordering a contract. Don't fall for these investment scams. 9. Credit cards. Believe it or not, credit cards are a financial trap. In fact, you think you're saving by using a credit card, but in reality, the credit card increases your spending. Credit card companies are very good at attracting new customers by offering freebies at the time of sign-up. Count the number of college students who have dozens of credit cards. Note that these students haven't even started earning a penny, but they already have thousands of dollars in credit card debt just for having it. If you add in the hidden fees, it's possible they're being charged fees comparable to or even higher than those of loan sharks. How can you avoid this problem? First, it's good to have just one credit card for emergencies and cancel all other credit cards you don't use. Second, try not to buy things you don't need. Third, pay off all your credit card debt and avoid accumulating credit card debt. If you adopt these few precautions, you won't have an unimaginable credit card debt. Remember to set a budget lower than your income and always stick to it. 10. Insufficient savings. It is said that without savings, you are vulnerable, and it's true. Unexpected expenses, no matter how small, always push us into debt. A wise man once said, if you don't manage your money, it will take control of you in no time. How much to save and how much to spend is always a difficult question, and this decision affects our net worth, the quality of our life, and, most importantly, our stress levels. The general rule is to save at least 10% of your income, but I advise you to save as much as possible. You never know what might happen. For example, if you're thinking of buying a house, you need to have enough money to make a 20% down payment, cover moving expenses, and maintain a decent emergency fund. To do this, you should have many savings in your account. We need to gather funds to achieve our dreams, and savings can help a lot in this regard. We want you to keep these financial traps in mind and avoid them wisely. It's now a reality that debt is a big deal, and falling into these traps can only enrich others. If you want to finance your dreams and enjoy the fruits of your labor, your choices must be different. We are interested in discovering your personal experience on the topic. Write it in the comments and feel free to ask any questions, we will be happy to interact. Feel free to leave a comment so that we can improve the content. Your like would be the cherry on top, and click subscribe to stay informed about upcoming publications.